Morning traders, it's Monday, it's the 20th of January, and this is the DAX Technical Analysis Daily Webinar. Hope you had a good weekend. Welcome back to the markets, and let's get started. Trading financial markets is risky, involving the risk of losing invested money. We're not providing financial advice here, so all trading decisions will be entirely at your own risk. And if we just take a look at the moment at this 60-minute chart here that I've got lined up, and there's a couple of lines here of confluence that look interesting to me. I'm just going to remove this one here. And the three that I've drawn are taking a couple of points off of the market. If we just clear the chart up, it might be a little easier to try and see what we've got here. The first thing that was interesting me was this little tweezer top pair here. And we had this impulse candle followed almost immediately by this downside reversal, if you like, an engulfing candle, which didn't really get that far. In fact, this low here failed to actually break this low back here. So that was a bit of a rejection of lower pricing from the market. And then since then, we've gone on and actually challenged the highs that we found around about the sort of earlier part of January. So that zone might be of interest for the market to come back to look to reach or test. Find some additional support. So that's the first thing. There's also a gap in here as well that I don't think is actually closed. It's still exposed for the month. So that would be an obvious spot for the market to want to at least test on its way to higher prices, if that's where it goes. The second thing that I pointed to was if you take just a basic line from this high through to those two highs there, they connect up here and just extend it through, take a parallel of that line, just connect it up to the low of this one. You'll notice that the basic channel low here would be around about the entry point of this zone that we've just marked out, around about the highs of these two tops here. So that might be an interesting spot to look at. And the final one to do is to pull from this C point all the way through this recent low, and you'll see that it pretty much draws a similar line at this area here. So there's a zone of confluence of three areas that we've got that could be of interest. So from there, it could do obviously a few things. It might completely ignore it, and it means absolutely nothing, and it just continues to move sideways in its current trendless fashion through that. If it does continue to build from here, then that would be an interesting point for potential ignition to go and test the all-time high. But if it actually breaks to the downside, I'd like to see a kind of a test of this gap low, but ultimately down to test this major support zone here, just to see if there is still some demand in that area. People are still looking to add to their positions there, because if they're not, then a more serious not reversal, what's the word I'm looking for, more serious corrective pullback would be somewhere down towards the 200 zone. For me, I'm still liking to see a move to the upside, and whilst I'm looking at getting some signals at the moment from the strategy to the downside, I'm wondering whether it's going to be more of a very short-term corrective. Alright, if we're taking a look at the composite January profile over here on the left, we've got the point of control. It's just around about the high of this open January high there, which is around about 400. Again, is another area where we have been consolidating and oscillating around over the last week or so. And so this is a pretty considered value area now. It's a balanced zone where price is happy doing business. Breaking out of it is going to require some pretty significant ignition. So we've got to maybe look towards the macroeconomics to see whether or not we can have that ignition this week. And we've got to pay attention really, because we've got central bank information this week. In fact, I think central banks will take the main stage for this week. We've got ECB on Thursday. There's Bank of Japan tomorrow. And we'll also get some news on the pace of the global recovery. And there'll be things like PMIs and other bits and pieces as well. Today looks probably set to be quieter than the rest of the week. So I think it's probably more likely to see another sideways looking day where we sort of extend up to a high, we then extend down to a low, and then continue to trade inside that range for the majority of the day. when we get those highs and lows is difficult to say. All right, if we go and take a look at the daily chart real quick. Main things for last week, or for Friday, is that pretty much the majority of the week traded in the same range. In fact, we actually did trade in a very constricted range for the entire week. We're only looking at about 200-point range. And we consider the average daily range is 176. The weekly range last week was only 25 points higher. So nothing particularly special. We had a spinning top to start the week, and then it kind of tested both sides for the rest of that week. On Friday, we had like a 90-point range, I think, something in that region. It was high of about 550, low was about 450, so maybe 100 points, something in that region. Still massively below the daily range. The January profile is the same as the composite 2020 profile, so there's nothing really to discuss on the daily. And the other thing I've been looking at recently is to just keep an eye out for the moving averages, just to see what they're doing. And the 5 is still above the 8, but it's pretty close. We're all on top of each other at the moment. It's not really providing anything significant to look into. All right, so key levels. If we take a look through these, Friday's key levels are dominated by the fact that we pretty much moved sideways for the majority of the session. All of the afternoon session was contained within a very, very tight range between 484 and 520. That's a 35-point range for half a trading session. So that's pretty obvious to show that the point of control and the value area is clustered around this zone. The pivot and the point of control are pretty much on top of each other. Whilst that doesn't necessarily mean a great deal, it just shows you where price is likely to head back to. And lo and behold, right now we've equally oscillated either side of that point of control so far today. So we're at 25 points either side of it, almost exactly, perfectly either side of it at the moment. So it's starting to establish itself in a mini range today, and I'd like to see one of those get broken before lunchtime, really. It seems that the early momentum is with the bears, so it seems to be more likely that it's going to break to the downside. But if it does, how far it goes is always the question. And there is plenty of demand to contain this price action in its current range, so it's going to be difficult. And in actual fact, I think that the low of today is actually already the low of this range, so we are pretty much range bound right now. Failure to take out this high strengthens the case for the bulls to the downside, but the longer it remains above 483, the longer it's going to stay inside this range. All right, that's pretty much all there is to discuss today. Just remember to get yourself onto the website, thedaxtrader.co.uk, and you've got all the tools that you can take advantage of over there. So the webinar, of course, you've got the chart, got all of the different articles and tools that are available. So go and have a look through all of those, and there'll be some information there. I posted an article over the weekend just to give you a year-end update on our Forex signals for 2019. A good year posted for the Forex results, so go and check those out if you want more information. Got off to a pretty quick start this year as well. I think we're around about 7% gain, maybe 8% gain for the year so far. So pretty good start. And of course, if you want to keep up to date with what we're doing on the strategy as well, and you want access to all of that, as well as getting access to the Forex signals, then you can subscribe if you want to the channel over here on the right. And all of the tools that you'll see on the website should be free to use, apart from the software, which is of course not for free. The chart is available here. You can change that if you want to go and check out, for example, Bitcoin, which was trading around about 9,000 over the weekend. So again, if you're still involved in cryptocurrencies, you had a bit of a boost with the break of 9,000, but it was almost immediately followed by a rejection of higher prices. So whether technical analysis works on cryptos or not, I'm not that bothered about having that debate. I just like to follow it because I do have a holding in various cryptos from 2017 still. Right, so what are we looking at here then? Oh yeah, the chart. If you want the external chart, then you can look at a couple of the tools here. You've got the trade size calculator, you've got the DAX chart down here, live stream if you need it. Of course, the webinar channel is over here, so feel free to use that. Get involved with the Telegram channel as well. Just go to the tools, free Telegram channel will take you over there. I look forward to catching up with some of you on the other side. But until tomorrow, guys, hope you have a good trading day, and I'll